Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, a lot of very important things to go over today on this Wednesday, August 14th, 2013. What I'm going to tell you today, I said yesterday, and it is the most important thing and the only thing you need to know about the S&P 500 and the markets going forward if you want to know if the markets are going to stay up or break down sharply. Simply put, see this green trend line sloping up? This one down here at the bottom? That is all you need to know. If that gets taken out to the downside, if we close below that line, this market is done in the short term. It will head lower and head lower quickly. As long as they keep it above that level, they can save this market. And that appears to be what they're trying to do now. Volume getting very, very light. We had a little bit of spike as a downtick came in here, but now they're saving it. Notice you tagged the green line again. Yesterday you tagged and pierced it, and they held it and pushed it up. Today, again, tagging it and pushing it up. If we go to the day before, going to last or Monday, they opened it on that level and bounced it up. See how important this level is? If I zoom out, look at where this level goes to. They'll pivot right here. Dead low on the 26th of July. If we go back further, the gap window low right here on the 11th. This line is the only thing you need to concern yourself about, in my opinion, when you're looking at this market. It's the only thing, folks. That's it. All right? If this line breaks to the downside, if we close below this line, downside will be fast and furious. First target downside on a big flush would be 167.50, then ultimately 166.50, and then all the way down to about 165.40 on the SPY. And again, we're looking at the SPY, which mirrors the S&P 500 as the tracking ETF. But I'm telling you right now, folks, this is it. If you stay above it, they could keep this market up. Honestly, they could. We could actually see new all-time highs. But when this line breaks, whether it's today, whether it's tomorrow, whether it's next week, next month, when this line breaks, which it will do, I promise you that, it will at some point break. When it breaks, this thing goes downtown fast. Only thing you need to care about right now. That's the only thing, in my opinion. Only thing. All right, that's the SPY. Let's take a look at a couple key stocks. Apple's having a nice up day, although it's off its highs of the day. Went as high as 504.25. If we go to the daily chart on Apple here, guys, take a look here. Your ultimate next target right here on Apple, if it continues up, right here at 515, and then there's a minor gap fill at about 520. These two are your ultimate target lines on Apple at this stage based on everything that I'm seeing currently. Okay? So keep an eye on that. I think that's very important to watch. And for Apple, that, if it gets there, would be a shorting opportunity, in my opinion. A very nice shorting opportunity. All right, a couple other stocks in motion today. JP Morgan Chase. JPM is barely hanging on. Earlier in the day, was having a great day, making a higher high than yesterday, even with the market down and weak. Made a bearish flag pattern, broke down, and it's now trying to crawl back up. JPM, I look at this as a leading indicator. If it's able to move up, the markets generally can move up. If it's not able to, this market goes down. All right, so JPM, great leading indicator to follow on here. Chevron, which has been an oil stock that has been continued to be crushed after their earnings were just horrendous. This stock continues to go down here. Take a look here as we see. You've gotten a nice move down off of earnings. Now it's consolidating. I think it makes a bearish flag pattern and heads lower. Overall, net, if you ask me where I think this market will be in a month or two, I would say lower than current levels. If you ask me where it will be in the short term over the next day or so, all I do is refer you back to the SPY chart, and we just simply watch this lower green trend line. That's all you need to watch. That's all you should care about. That's it, folks. That is it. Okay, so just follow that. That'll lead you through to the promised land of profits as long as you abide by the rules there. The free trial here at InTheMoneyStocks.com, I'm going to cover this in 10 times more, giving you guys trade alerts and everything else. I have a bunch of trades out there, one being short Tesla, and Tesla's getting crushed again today. You can see I day traded it for a little scalp there. I made about $1 on it on an intraday basis today. That was a nice little scalp, but Since then, it's kind of floated. Now it's above the 20, so that's doing all right. But either way, it's down over $5 today, getting absolutely smacked around. So a nice little smackdown on Tesla. If you look at the daily chart, take a look at the daily chart. Daily chart continues to fall. This was the day it reported earnings. It gapped up, and that's been the high. Now you will run into some support around the 20 MA and the gap fill level. There'll be a lot of support there. I actually do expect a bounce off of that level. Eventually, it will go through, I think, but in the short term, yeah, I mean that's a nice level. No doubt about it. That is a nice level. Okay, so that's Tesla's chart. We're going to continue to go to a few other charts out there that are moving today. Another one, we talked about Apple. You gotta talk about Amazon though. I've been the biggest bear on Amazon ever since they reported earnings and it popped. Remember what I said to you guys? The reason why it popped was simple. All right, Amazon popped on earnings because after earnings the stock was actually down, but it was only down like $5. So a lot of people had shorted it going into earnings, hoping for a big drop because everyone really is a hater of Amazon. They all think, oh, the PE is like crazy. I mean, it is in all fairness, and I agree with them. But what you saw here was a lot of people short it, and then initially it wasn't down much, so they all started to cover, and then that covering is forced buying, and it just ripped the stock price up on the day of earnings, which was this move right up here. And then once everyone covered, that had shorted it into earnings, then the stock could go back to its natural course, which was down based off of the horrendous earnings. And their earnings were horrible. But I think it's so funny how it popped initially because of short covering, and then it just has come straight down. You know, a lot of shorts back there, if they just held on here, they'd be in the money very, very nicely. So just something to follow there. I think that's a fantastic little chart. It is into support here, and if it gets a bounce and if we get a bearish pattern, I'm all about shorting it, folks. You give me the bearish setup on Amazon, and I'll short it again. I think it's going much, much lower. I think by the end of 2013, you see the 200 MA down in this area. I think as low as 260 to 270 area, easily hit, possibly even lower. Okay? What else? We talked about JPM. Goldman's flat on the day, not much there. Apple's having the good day. Google. Let's talk about Google because the head and shoulders pattern on Google continues to play out. Take a look at this head and shoulders pattern, guys. This is a thing of beauty. There's your shoulder, there's your head, and here's your other shoulder. It triggered a couple days ago, or actually yesterday as of the close, it triggered. There's your neckline. So it triggered yesterday and it continues to fall. Remember, head and shoulder patterns are bearish patterns. And sure enough, this is getting a beautiful move to the downside. So really nice action on Google. I think it's not so much that people are hating on Google in terms of, oh, it's a bad company. I don't think that's happening. I think more so it's Apple's running, so money is flowing from Google into Apple. Therefore, if money's flowing out of Google, it's going to cause the stock price to decline. That's my expectation at least. Okay. All right, and we'll see again how that plays out. But that's what we're seeing right now here. I'm trying to think about anything else on this. IBM, let's do a quick check of IBM. Yeah, IBM lower down $1 again. That stock's just been a horrible performer. Take a look at the year so far. All right, it hit the 52-week highs earlier in the year, and then ever since then, it had some big bounces along the way. But I mean, that thing has come in sharply ever since. So, yeah, quite something. All right, just going back to the spiders to reiterate, folks. I'm not going to take up much more time here. It's all about this trend line. Notice the bounce you got off of it already. If this line breaks, this market goes down quickly. As long as that line holds, that line is golden, and the market could float up. I mean, we could go back to the highs of the day over the next couple days, the 52-week highs, if this line holds. As soon as this line breaks, downtown big time. All right, just remember that. That's all you need to know. I'm done here. Come join us here at InTheMoneyStocks.com. Get trade alerts, live broadcasts, market reports, videos, you name it. It's all here. Live action, trading action, profit action. Come join us here. Take the 7-day free trial to the Research Center. Take care, guys.